Shares of IEX hit a lower circuit. In fact, now temporary freeze of 15% as the Central Electricity Regulatory Commission, or CERC as we know it, has approved market coupling in the day-ahead market in a phased manner. The stock, remembers, also in an F&O ban and will report its earnings today. But the biggest downward pressure is the market coupling news.
Mid-cap IT leaders, they slump following the first quarter numbers. Coforge reports a miss on margin expectations. The street is a little bit concerned on the capex spend as well in the first quarter. Persistent Systems revenue growth and deal wins disappoint. Both stocks take a clonk, 7 to 9% lower.
The street cheers for Dr. Reddy's first quarter numbers. Tata Consumer too also trades with gains after reporting a largely in-line set of numbers for both companies.
Syneris Pharma, well, that's rallying more than 10% as it delivers a near 100% growth in the net profit and strong margin expansion in the first quarter.
Viatech Vabag shares are higher. The stock's given up some gains, but the company has won a 23 crore order to set up a desalination plant in Saudi Arabia, something that the management had alluded to earlier.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. We've had our day really cut out because 9 to around 3:30 we'll be tracking markets, and post 3:30 our heart and head moves to Old Trafford. Hey, Mangalam.
Trafford is what we're doing. Let's see. And as of now, the way it is going, it looks like it's a good game for us. Poised well. Let's see whether 2-2 happens or not. But for now, the market's 9:15 to 3:30.
And I just hope, Pant can come back, in this game. But it didn't look too good yesterday.
Let's hope he, can bat in the second half.
Yeah.
Whether he does or not, we don't know. But for now, I'm hoping for us to bat out so well and for our bowlers to bowl so well that he doesn't have to come back anyway. But be that as it may, let's get markets tracking. We have Saumil Mehta of Mirae Asset joining in. Saumil, we're not going to ask you about the charts for Team India. There is volatility there. But for the market chart, there is, this range-bound movement that we're seeing. 25,000 at the lower level, 25,250, 25,300 at the upper level. We've been oscillating between that, give or take every piece of news that has come in. Good earnings, bad earnings, great earnings, trade deal, whether it's between US and EU, US and Japan. We are in this range.
Absolutely. It's very annoying to see this range and 25,000 levels from last May, from last 4 months that we have been looking at 25,000 levels. But I think I'm positive overall. Monthly charts, weekly charts, all high top, high bottom formation. The correction which we saw in the last a few weeks from 25,600, 700 to 24,900. That correction, I think, in the short term is over, and now we are again headed upwards. Crucial supports around 24,800, 24,700 levels, and on the upside now again the trend changes from down to up, and the target would be 25,600, 25,900 levels. But because today is the expiry, I'll be expecting a range-bound movement, but overall high top, high bottom formation, I'll be expecting Nifty to close above 25,300 levels, which is the 20 daily moving average very soon, maybe next week. Pharma is looking good. PSU banking has had a good correction, so I think there will be a good bounce back. IT has had a good correction, so there I'm expecting a small bounce back. So yes, overall positive on the markets. I'll be expecting 25,600 levels in the short term.
All right, 25,600. You're a little concerned, Saumil, about the frustration that's going out there. But some sessions you need to just bat out, right? And wait for the good deliveries and then up the game. Then the run rate will pick up.
And not get annoyed. That's most important, no matter what happens.
Don't throw your wicket.
Absolutely. We just have to stay there and just, leave all the balls outside the off stump and stay there on the wicket.
Be careful, but the ball doesn't come in, because
oftentimes no trade is also a trade. No trade is also a trade. Zero is a good position to be in.
That's let's keep the cricket aside. Let's get back to the markets. After 3:30, we'll three of us will get on a call. Maybe grab a coffee or a drink, maybe depending on each of our preferences, and then we'll see. But tell us about individual stocks. What are you tracking?
The first stock I am tracking is from Pharma Pack. Ajanta Pharma is looking great. A small flag pattern broken on the upside. Great momentum today. Stop loss would be 2700, 2700, and target would be 2900. The second stock which I'm looking at is Indian Bank. Indian Bank has been on the uptrend, consolidating in the last last month, and taken support at 40 daily moving average. Good risk reward here. Stop loss would be 614, and targets would be above 650.
All right. So those are a couple of stocks that you've given. Let's view one of the stocks which is under tremendous pressure today and perhaps likely to be going forward as well. That's what the analysts are saying. IEX, temporary freeze of 10%. That's open. Now the stock is in another temporary freeze of 15% after CERC has approved implementation of power coupling with the day-ahead market. Vivek joins in. The worst fears come true, Vivek, and the stock price telling you that.
Absolutely right. Every time we've discussed IEX, we've always ended or always cautioned our viewers saying that, the biggest overhang remains the likely implementation of market coupling. And that fear, unfortunately has actually fructified. Now, let's quickly look at, given the fact that we now know that market coupling will be implemented from Jan 26 in the day-ahead market, let's quickly have a look at the impact that this will have on IEX as well as other listed stocks. Of course, IEX, we'll go through that in detail. Dalmia Bharat, remember, owns almost 11% stake. So that's another company that will see the value of its holding in IEX actually fall down. And the other stock, importantly, is PTC India. Why is PTC India in focus? Remember, PTC India holds close to 25% stake in the rival exchange of IEX that stands to benefit most likely from higher volumes, which is called as HPX. So PTC India today is also under focus. Now, talking about IEX itself, what our brokerage is saying. UBS says that this is a negative surprise both for them as well as compared to market expectations itself of the implementation of coupling. The coupling of real-time market is also going to be considered at a later stage. FY25, just have a look at the contribution to the revenue. Day-ahead market contributed 50% and the real-time market contributed 30% to the revenue. So almost 80% of the revenue will be impacted by the implementation of market coupling. Bernstein says that this particular order is worse and different from what was built in. Not only volumes, they also say that the transaction charges, which are quite high at IEX, also will come down sooner, given the fact that now exchanges will now have to compete on an even footing, given the fact that the price discovery process will happen across all three of the exchanges in a roundabout manner. So now IEX, remember, has 40% market share in the term ahead market, and the DAM is the most important with 46% of volumes of total IEX coming in from DAM. So what they're saying is that moat of liquidity has gone. Only way to compete is through transaction charges, which will be reduced. So overall, a negative development for IEX, and no wonder then you're seeing the stock. Remember, two things to keep in mind. Number one, it's in the FNO ban, and number two, results are scheduled for later today.
Okay, all right. Thanks a lot for that, Vivek. Well, let's focus on Force Motors. That's the other one trading with solid gains. The stock is at a 20,000 rupees stock. I recall we explained this company here on CNBC-TV18 4 months ago when we spoke about the premiumization push. And I've seen way more number of Urbanias on the road, both in Maharashtra as well as in my visit to Uttar Pradesh. Sudarshan joins in to tell us about those numbers. Sud.
So it seems like that unlike other auto companies which have been talking about the slowdown in the demand, there is no slowdown in the demand, at least as far as intra-city buses are concerned, school buses or ambulances are concerned. And this is what reflecting the earnings of Force Motors, which has released a very strong set of earnings for Q1 of FY26. And that was led by healthy volume growth. If you talk about volumes, overall volumes were up 19%. But domestic business forms more than 90% of total volumes. And here domestic volumes were up 26%, and that has led to increase in the realization, which was up almost 3%. Now, talking about the overall numbers, profit was up 52%, revenue has increased by more than 22%, EBITDA too has seen a rise of 33%, and margin has come in above 14%. It was at 14.4% versus 13.2%, and here also it's the expansion of 120 basis points, and this is what reflecting in today's stock price. It's up almost 20%.
All right, that's about Force Motors, up 20% after a good set of numbers, coming in a record high for that stock. What we'll do is take a short break. On the other side, the management of Persistent Systems joins in to detail their first quarter numbers. The stock lower in today's trading session post those results. Welcome back. Look at Paytm. That stock's moved higher right now. Reported its numbers day 4 yesterday. Decent set coming in. The street liked that. The stock continued to move higher. Thereafter, the stock has been doing well. And this, in line with a lot of these new age companies that are seeing a fair amount of buying. So Eternal, for one as well, has now moved to the high point once again after seeing a big move post its numbers. So immediately after the numbers, the stock was up almost 15% in the preceding, in the following day and a half. And thereafter, we have another 3.5% movement coming in on that stock, taking its weekly gains to 21%. But one stock which is at the lower level in today's trading session is Persistent Systems, down almost in high single digits, trading with big cuts after the first quarter numbers came by. Not so good for the IT pack. Revenue growth missed street expectations, just as all the other companies reported numbers barring Infosys. Margins, however, in line with expectations. Rima spoke with Sandeep Kalra and began by asking him about his expectations from the quarter that we're in right now.
We have said it multiple times. We don't give forward-looking guidance. But if you look at our trajectory, if you look at our performance over the last 21 quarters, if you look at the order book, all of these are healthy. The pipeline is healthy. We'll let the quarter pan by. Keep in mind the macro is a little bit iffy because of the various, tariffs on, tariffs off, various things that have happened, whether it was India, Pakistan, whether it was the Iran conflict. And there is a little bit of, iffiness in the market, but we believe that should get resolved as well. So from our perspective, good performance so far, reasonably confident going ahead. I'll just leave it there.
And H2 versus H1, what's your own expectation?
Okay, so let me give you a bigger picture, and then we'll see H2, H1. So if you look at it, we have always said in the last several years, last couple of years, we want to be a $2 billion company aspirationally. Again, this is not a guidance. By FY27, we want to be at $2 billion. Now, if you do the maths, we have to compound from an yearly compounded annual growth rate at about 19%. That's our aspiration. We are currently at 18.8% on the year. So I'll just leave it there, whether it is Q2, whether it is H2, whether it is next year. If you compound it to the next 2 years, don't worry about one quarter or the other. But if you look at the bigger picture, that's our aspiration. The entire team at Persistent is working towards it. And that may include a tad bit of acquisition. So that is where it is.
But do you think 19% revenue growth that you need to achieve this aspiration of $2 billion can be achieved only organically, or will it require acquisitions? And if those acquisitions come, will they be over and above the $2 billion? And where are you looking at acquisitions?
Sure. So look, it will definitely have some amount of M&A, the acquisition part. Now, depending on the size of the acquisition, we may get there faster. We may have smaller acquisition, bigger acquisition. And to that point, look, at any point in time, we are evaluating multiple different options. We have said our acquisition strategy is twofold. One, Europe as a geography, we are currently at a 8.5 to 9% revenue clip. We have grown Europe at the company pace for the last several years, but we want to take a step change in Europe. We want to grow Europe over the next several years to 15% of our revenue. And that is basically to balance our revenue profile. And also, as we grow bigger, it's a healthy mix to have. Second part, we have said we want to be very well known for what we have always done better, the technology capabilities. So as the field of AI data is evolving, there are two pivots to that. One is the data and AI competency itself. Second is the domain competency in the verticals that we play in, which is banking, financial services and insurance, and healthcare life sciences. So our acquisitions for capability will be in most likely North America, India corridor. Our capability-led acquisitions will be in the areas I talked about. Our geographical expansion aspiration is in Europe, followed by Japan later. So any of the acquisitions in geography will be at scale to basically get us the toehold in customers in the areas, geographical areas where we are not that strong as of this point in time. Hopefully that answers you.
What's the war chest for M&A?
So look, we have $300 million of cash. We generate about $100 to $120 million every year. And we have the ability to raise money to whatever extent we want to. But again, look, our aspiration is to be the best technology services firm out there. And in our mind, the next generation tier 1 companies are not going to be defined by their revenue size. They are going to be defined by the capabilities. They're going to be defined by their ability to add value to the customers. And if you look at the journey of Persistent over the last 5-6 years, increasingly we have taken market share away from the larger companies. if you look at some of the relative sizes, the biggest company in our sector versus us, we have, if you look at the numbers, we have, by any metrics, outpaced any of the companies based on capabilities. So from that perspective, capability-led, focus there, and that's where it is.
Your margins are higher, 150 basis points on a quarter-on-quarter basis. But from here on, from 15.5%, can you expand margins? And what would Q4 exit margins look like?
Okay. So first, Rima, the margins are 150 basis points higher year on year, not quarter. So from that perspective, if you look at quarter on quarter, last quarter was 15.6%, this quarter is 15.5%. But keep in mind, there's a significant exchange rate, fluctuation that has happened. Now, if you compare the last full year was 14.7%. Now, if last full year was 14.7%, our starting point for Q1 is 15.5%. Again, we don't give forward-looking guidance, but if you extrapolate it, you can do your maths. And we have said we want to increase our margin as we go along by 100 to 200, 300 basis points over the period of time. We are on that trajectory. So I'll leave it at that.
But you've decided to defer your wage hikes. You typically give it in Q1. I mean, you typically give it 1st of July. But this time, given the macro, you've decided to wait. Take us through the reason behind that. And when do you think you will have the confidence to go ahead and give a wage hike? Or do you think this year, maybe the industry doesn't give employees a wage hike?
Okay, so two parts to it. Many people in the industry are deferring wage hikes by quarters and maybe for the full year. We are not doing that. We have just said we'll defer it by 1 year and that is cast in stone. We are going to give the wage hikes next quarter. And if by the end of the year, if things pan out the way we want them to, maybe we will also take care of whatever we deferred. So that's one part to it, because at the end of the day, our employees are our biggest assets. The reason why we deferred the wage hike is twofold. One, there is a tad bit of softness in the market. There's uncertainty. We just want to make sure we have a healthy company. We never get to the point where we have to lay off people. That's point one. Second, we are investing big time into AI. That is going to be our pivot into growing the company in a very differentiated manner, at a very differentiated pace, at a very differentiated profitability over the next several years. We need investments. We can't do everything at the same time. So we are trying to make sure that as we train our employees, as we invest in them, as we invest in our capability build, we are being prudent. So that's where it is. And it is not to do with the entire industry. Even when the entire industry was not giving bonuses, was giving 60% bonuses, I'm proud to say for the last 6 years, we have been anywhere between 92 to 107% of our employee bonuses on a yearly basis. So that's where it is.
Healthcare for you was a bit soft. I think it declined by about 1.9% on a quarter-on-quarter basis. What was the reason for that? And going ahead, what will drive growth for you, Sandeep?
Sure. So two parts to it. What will drive growth for us this year? Banking financial services, followed by high tech, followed by healthcare life sciences. Now coming to healthcare life sciences, if you look at the trajectory of healthcare life sciences in the last 6 quarters, and maybe when you do the analysis, you look at that, healthcare grew at the fastest possible clip in the whole industry for us. And it was at one point in time more than 60% year on year. Now, look, we have grown that sector. There are times where we are signing deals where we have to take the revenue, convert that into offshore-led as a part of the cost savings for our customers. The consolidation of that piece is happening. And as we speak, for the next 1-2 quarters, that will happen in one of the larger customers that we have. Having said that, it's a sum of parts. We are very confident. If you look at the end of the year, all the 3 segments for us, whether it's BFSI, the banking financial services, healthcare life sciences, or high tech, all of them will grow secularly. So that's where it is.
Okay, all right. That was the management of Persistent. For the time being, the stock continues to remain under pressure. Well, before we slip into a short break, a small programming note for all our viewers. As the workplace transforms, so must leadership. In the Bengaluru edition of Future Female Forward, Season 3, India's top business leaders gather to reimagine what inclusive leadership looks like and how women are powering the future of work, capital, and innovation. Catch it live on July 29th, 5:30 p.m. onwards, only on CNBC-TV18, CNBC-TV18.com, as well as on YouTube.
Welcome back. PG Electroplast, stock which has moved higher right now, 361 VAM, as well as the other one which has surged Indian Bank, which was, one of the picks of our tech guest, that too has moved to the high point of trade. But Prime Minister Narendra Modi has arrived in the UK ahead of the signing for the free trade agreement with the United Kingdom. That will take place later today. Parikshit joins in with more details. Parikshit.
Well, the big headline is that India will be reducing tariffs on UK products at an average level from 15% currently to 3% once this FTA is implemented, once the UK Parliament ratifies it. In terms of access for UK goods, UK's cosmetics, Scotch whisky, gin, UK lamb, soft drinks, they are likely to get better access to the India market, even automobiles for that matter. On the auto sector, advanced cars coming in from the UK, especially electric vehicles, will see a 10% tariff, but this is not going to come into effect immediately. It will come into effect in a graded manner, and there will be quotas for a certain number of vehicles which will enjoy a zero duty or a reduced duty access to the India market. Now, coming to marine exports, the FTA will eliminate tariffs on 99% of marine exports from India, including shrimp, tuna, fish meal and feeds. Tariffs on Indian leather and footwear eliminated from 16% to zero. Duties on Indian textiles will be reduced from 12% to zero. India's footwear, textiles, leather exports to UK to get preferential access over Bangladesh, Pakistan and Cambodia. Tariff on engineering goods will be reduced from 18% to zero. India's generic medicines market to get a boost with zero duty access to the UK market. Gems and jewelry, toys, plastics and chemicals, all of them will benefit from tariff relaxation through this FTA, and the Indian MSMEs, Indian workers, Indian businesses in this sector will benefit. The FTA will also support movement of professionals in critical and emerging technologies and digital trade. There is a separate chapter on innovation and how the mobility agreements should support innovation between the two countries. There will be zero duties on 95% of agriculture and processed food tariff lines. So you'll have duties eliminated on India's agri-exports of fruits, vegetables, cereals, pickles, spices, processed foods, ready-to-eat foods. But dairy, apples, oats, edibles oils, wheat, rice, maize, these will not be included in the free trade agreement, as these are red lines for India.
All right, take that point, Parikshit. Thank you so much for that. Just before we wrap up on this show of Chartbusters, pull up the intraday chart of IEX once again. The 15% temporary freeze has opened. Now the stock is down 20% right now. As we speak, 20% lower on IEX at 150. The 15% freeze also has opened. Remember, the stock is in F&O ban. Take a short break, come back. On the other side, we have the team of Trading Hour coming up next. Thank you for watching Chartbusters.